I want you to look at two numbers with me, just two. I have the financial report right here. And these two numbers are just staring me in the face, and they're telling two completely different stories. First, open the income statement for Birko. This is for the year ending 2025. Look at the bottom line, net profit.
Okay, I see it. 138,100,000 Turkish lira.
Right. On paper, that is a banner year. You see that number, 138 million, and you think, okay, this company is firing on all cylinders. It's, a celebration. But now, flip the page, go past the balance sheet, all the equity changes, and hit the cash flow statement. Look for cash flow from operating activities.
Negative 139 million lira.
It's almost the exact same number, just inverted. They made 138 million in profit, but they burned 139 million in cash just trying to keep the doors open.
Wow. It's a perfect mirror image. And it creates this massive cognitive dissonance for anyone reading this report. You've got a P&L statement telling you the company is wealthy and a bank account that's basically telling you the company is bleeding out.
It's baffled me completely. I mean, how can a company be so profitable and so broke at the same time? It reminds me of this metaphor I was thinking about. It's like a phantom feast.
Phantom feast. I like that.
Yeah. Imagine walking into a dining room. The table is set, silverware is polished, and the menu says there's a 10-course meal waiting for you. That's the net profit. It says you are full.
But when you actually sit down to eat, when you pick up your fork, that's the cash flow. The plates are empty. There's no food. You starve to death while reading a menu that says you just ate a banquet.
That is exactly what we're looking at today. It's a financial mystery that really highlights the difference between, I guess, accounting reality and cash reality. Welcome.
It's good to be here. And you're absolutely right. This isn't just a story about numbers. It's a story about inflation, it's about real estate, and it's about how accounting rules, specifically inflation accounting, can sometimes, obscure the true health of a business.
Our mission today is to decode the 2025 financial statements and annual report of Birko Barlej Koyunlular Mensiket Tikaret ve Sanayi Eş.
That is a mouthful.
It is. We'll just stick with Birko. And we're doing this specifically for the individual retail investor who wants to look past the headline numbers. The person who sees that 138 million profit headline and thinks, buy, 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 without checking if there's actually any cash in the bank.
And that is such a dangerous way to invest. My role today is to be the forensic accountant, I suppose. We're going to explain exactly how a company loses money making carpets, but makes a fortune on paper thanks to something called monetary gains.
I'm actually really excited to unravel this. It feels like a detective novel. Let's first get to know the company a little. Who are they? Where did they come from?
Okay, so Birko has some pretty deep roots. It was founded way back in 1972 in Niğde. Originally, their focus was on wool. Koyunlu is in the name, which references sheep or the place Koyunlu. It's a real heritage brand.
Right, classic textile heritage. So they've been around for over 50 years.
Exactly. Then, you fast forward to 2010, they merged with Birko Koyunlu Halı to focus much more heavily on the carpet sector. So for a long time, if you lived in Turkey, you probably knew the brand. They're a manufacturing staple.
And geographically, where are they planted today? Because usually these old textile giants, they stay close to the source, right?
They do. Their headquarters is actually in Istanbul now, in Beykoz. Pretty nice address for the administrative side. But the operational heart, the facilities, those are still in the Organized Industrial Zone, the OSB, in Niğde, on the Bor Road. They also opened a specific branch there for the OSB operations.
So you got the suits in Istanbul and the looms in Niğde.
That's a good way to put it, yeah.
Okay, so Istanbul for management, Niğde for production. What about the structure? Is it just Birko, or is there a whole web of companies here?
It's a small web. They have a couple of subsidiaries. The most important one is Koyunlu Textile. Birko owns it 100%. This subsidiary handles the marketing of the carpets that Birko produces. So Birko makes it, Koyunlu sells it.
Vertical integration, I like it.
In theory, yes. They also have Birko Energy, which is another 100% owned subsidiary established back in 2000. The idea was to produce their own energy. But here's the kicker. The report notes it as inactive. Garifal.
Inactive? Why would you leave an energy company inactive when energy costs are through the roof?
Yeah, you'd think so. It was regulatory hurdles. Back in the day, there were some incentives promised, but then the laws changed. It turned out that if they met certain employment conditions, the state would cover half their energy costs anyway, under different incentive schemes.
So the energy company just sat there.
It became redundant. It's pretty much a shell now.
Okay, speaking of employment conditions, this is where I just about fell off my chair reading the report. And I need you to explain this to me because the math just doesn't make sense in my head. You said they're a textile manufacturer. They have a factory in Nizas. They have a marketing arm.
Correct. They are listed as a manufacturing entity.
So I'm expecting, what, hundreds of workers? Maybe 1,000. If you have a factory big enough to justify a branch in the organized industrial zone, you need people to run the machines, people to load trucks, security, cleaning.
That would be the normal expectation for a major industrial player, yes.
I'm looking at the general information section, specifically note 14. It says, as of December 31st, 2025, the total number of employees for the group is 23.
23.
23 people. That's barely enough to field 2 soccer teams. How in the world do you run a textile factory, a marketing firm, and a headquarters with 23 people?
This is one of the most significant red flags, or at least curiosities, in the entire document. It went up slightly from 21 people in 2024, so they hired 2 people. But yes, 23 employees suggest that this is not a bustling factory floor in the traditional sense.
So what are they doing? Is the factory run by ghosts?
It implies one of 2 things. Either the factory is heavily, heavily automated,
Right.
which is, unlikely to this extreme degree without a pretty substantial maintenance crew, or, more likely, the production is outsourced.
Outsourced.
Yes, they might own the machines in the building, but the people running the looms could be subcontractors. They wouldn't show up on Birko's payroll. Or the whole manufacturing description is a legacy term, and they're operating more like a holding company or a trading house now.
So they just buy and sell.
Exactly. They buy goods, maybe brand them and sell them. But for a company that's listed as an industrial manufacturer, 23 staff members is incredibly lean. It sounds more like an asset management office than a carpet factory.
That sets a very strange tone for the rest of this analysis, and it makes me question their whole operational capability. So who is running this skeleton crew?
It's very much a family affair. The board is dominated by the Oakland family. You have Izzet Oakland as the chairman, Tunke Oakland as the vice chairman, and another family member, Nurin Oakland, holds a really significant chunk of the stock, about 13.90%.
And the rest?
The rest is highly fragmented. The other category, which is the publicly traded float, is 86.90%.
Wow, that's a very high free float.
It is. It means the ownership is spread out among thousands of small investors, probably a lot of our listeners, while the control sits very tightly with the Oakland family.
And what about diversity on the board?
Well, it's not explicitly highlighted as a metric they're chasing, but Nurin Oakland is a significant stakeholder. The board composition, though, is heavily weighted towards the family patriarchs.
Here's another weird number from the governance section, executive compensation. Usually when I read these reports, I see millions going to the top brass, key management personnel benefits.
Right. It's a big line item.
In 2025, the report explicitly states that no payments, zero, were made to top-level management. No salaries for the general manager or the board members.
Which really begs the question, why work for free?
Exactly. Are they just incredibly altruistic?
Rarely. In closely held or family-dominated companies, sometimes the compensation comes in other forms. Not necessarily illicitly, but maybe through dividends, though we know they aren't paying those. Or perhaps their compensation is tied to other related entities that do business with Birko.
Or, what's the other option?
Or you look at it from a cash preservation standpoint. If you are bleeding $139 million cash, taking a salary might be the straw that breaks the camel's back. They might be waiving their rights just to keep the company afloat.
That's a very sobering thought. We can't pay ourselves because there's literally no money. Okay, let's look at the business model. We established they make or at least sell carpets.
Yes, textile and carpet manufacturing and trading. But look at their market position. This is fascinating. In 2024, they had about 18 million TL in exports they were selling to the world.
And in 2025?
Exports dropped to zero, not a decline, zero. The foreign sales completely vanished.
So they're 100% dependent on the domestic Turkish market now.
Entirely. Their yurtici satışlar, or domestic sales, skyrocketed to nearly 168 million TL, but they've completely lost their international footprint. That is a massive strategic risk. If the Turkish economy sneezes, they catch pneumonia because there's no hedge in dollars or euros from exports anymore.
Okay, before we dive into the numbers, let's just do a quick SWOT analysis to kind of summarize where they stand. Strengths.
Assets. Tangible assets. They are sitting on a gold mine of real estate in Niğde. We'll get to the numbers later, but the land value is massive. That is their fortress.
Weaknesses.
Oh, where to begin? Negative operating cash flow is the killer. The loss of export markets is a major weakness. And that skeleton crew workforce suggests some kind of operational fragility. Also, they're highly dependent on related parties, which we definitely need to talk about.
Right. Opportunities.
Monetizing that real estate. I mean, if they stop making carpets and just become a real estate developer or sell the land, there's huge value there.
And the threats.
The high inflation environment, ironically, it helps their accounting profits, but it kills their operational costs. And the rising debt load. They are borrowing to survive.
Okay, that is the lay of the land. Now we can move on to our analysis. Let's open up that income statement. This is where the magic trick happens.
The illusion of prosperity. Let's peel it back. We started with the headline profit, but let's look at the top line. Revenue. Sales increased to 160.7 million TL in 2025. That's up from 102.4 million in 2024. That looks like pretty hefty growth.
It is about a 57% increase. In nominal terms, that looks good. But you have to remember, we're in a high inflation environment. If inflation is running at 50% or 60%, a 57% revenue increase means you are basically flat in real terms. You're not selling more carpets, you're just changing the price tags.
And like we said, the mix changed completely. Zero exports,
Yeah.
all domestic. I also saw a line item for sales returns.
Yeah, about 7.2 million TL in returns. That wasn't there last year. That's a bit concerning. It means almost 5% of what they sold came back. Quality issues, buyer remorse, we don't know, but it's a leak in the boat.
Now let's look at the costs. Cost of sales jumped to 79.4 million TL.
So gross profit is 81.3 million TL. That's slightly up from 77 million. Again, barely keeping pace with inflation. But the real explosion, the real detonation, is in the operating expenses. I saw that. General administrative expenses went from 6 million to nearly 26 million. That's a quadrupling of costs. How does a company with 23 people spend 26 million on administration?
You really have to dig into the breakdown. Consultancy expenses tripled to 6.3 million TL. Who are they consulting? And vehicle rental expenses just appeared out of nowhere, 4.1 million TL.
Wait. 4.1 million on rental cars. For 23 employees, that's like almost 200,000 TL per employee just on cars. Are they driving Ferraris?
It's certainly a high number. It raises questions about efficiency or perhaps transfer pricing if those rental companies are related parties, though the report doesn't explicitly link them. But the biggest hit wasn't even admin, it was other operating expenses.
34 million TL.
Yes, and the bulk of that is listed as Koyunlular, Kabul, Edelmine, Gitterler, non-deductible expenses.
Okay, can you translate that for us?
Sure. In tax terms, it means expenses that the tax authority says, we don't recognize this as a valid business expense, so you can't deduct it from your taxes. Usually this is stuff like fines, penalties, or expenses that lack proper documentation.
And 34 million is a lot.
It's huge. To have 34 million TL of non-deductible expenses is huge. It suggests something went wrong, either a massive penalty or some very messy bookkeeping.
So if we just stop right here, the company is actually doing terribly. Operating profit dropped from 67 million last year down to 22.6 million this year. They're making way less money from operations.
Precisely. If you stopped reading at operating profit, you'd say this company is in a serious decline. But then we hit the line item that saves the day, the monetary gain, or parasol kazans.
130.7 million TL. This is the number. This is the number that turns a mediocre year into a record-breaking profit. We need to go deep here. Explain this to me, but not just the high-level concept. I want to understand the mechanics. How does Birko specifically get this 130 million credit?
Okay, let's get into the weeds of TMS 29. It's all about your net monetary position. Think of your balance sheet in two big buckets. Bucket A is monetary assets and monetary liabilities. This is things like cash, bank loans, accounts payable. Their value is fixed in lira. If I owe you 100 lira today and inflation hits 100%, I still just owe you 100 lira. So inflation erodes the value of that debt, which is actually good for the borrower.
Okay, that makes sense.
Bucket B is non-monetary assets. This is your land, your buildings, machines, inventory. These things have intrinsic value. If inflation hits 100%, the price of the land should, in theory, double, just to keep the same real value.
Right.
TMS 29 forces companies to adjust Bucket B. Birko is sitting on a massive amount of land. Let's say the land was on the books for 100 million. Inflation is high. The accounting rules say, hey, revalue that land to 150 million to reflect today's purchasing power.
So they just increase the asset value by 50 million.
Correct. And in accounting, everything has a balance. So if you increase the asset side by 50 million, you have to credit the income statement with a gain of 50 million. That is the monetary gain. It basically says your shareholders' equity was protected from inflation because you held land instead of cash.
But, and this is the absolute crucial part, did anyone actually pay them that 50 million?
No, not a single kuru's changed hands. It is a valuation adjustment. It's paper profit. It's the phantom feast. You look richer, your equity's higher, your net profit is huge, but you cannot use that gain to pay the electric bill or that massive rental car invoice.
So the net profit of 138.1 million TL is basically all just this inflation adjustment.
Almost entirely. I mean, if you strip out the monetary gain and look at the tax and finance costs, they would likely be somewhere close to break even or even a loss. The earnings per share, the EPS, it rose to 0.987 TL, but investors have to know, those earnings are paper, not coins.
This transitions us perfectly to the balance sheet. If the profit is a phantom, surely the assets are real.
Oh, the assets are real, specifically the dirt and the concrete. Total assets grew to 2.53 billion TL. That's a massive number for a company with 23 employees.
And the heavyweight champion here is property, plant, and equipment.
Valued at 1.8 billion TL. This saw a massive increase because of revaluation. They hired an appraiser. The appraiser looked at their land in D-Day and said, hey, inflation is up, land is scarce, this is worth way more now.
Yeah.
And they added about 530 million TL to the value just from that stroke of a pen.
But again, unless they actually sell the factory, that value is completely locked up.
Correct. It's illiquid wealth.
Now, I want to talk about something that makes me nervous, actually. It makes me angry on behalf of the shareholders. Related party receivables.
Ah, yes. The rich uncle syndrome.
It looks like Birko is the rich uncle here. They have trade receivables of 97.8 million TL and other receivables of 89.9 million TL from related parties. That's nearly 200 million lira.
And to put that in context, that is more than their entire annual revenue. They have lent out or are owed more money by their family companies than they make selling carpets in a whole year.
Who owes them this money?
A company called Textiles owes them about 64 million in trade receivables. Another called Textile owes 2.2 million, and Koyunlular, their own subsidiary, owes them 31 million. And then in other receivables, there's another 80 million from related accounts.
So Birko is acting like a bank for these other companies. But Birko isn't a bank. Birko is borrowing money.
That is the opportunity cost and the huge governance risk. Birko's going to the bank, paying, 40% or 50% interest given current rates in Turkey, to get cash, and then they're effectively lending that purchasing power to Textile.
Is Tech still paying 50% interest back to Birko?
The report doesn't specify, but usually intercompany trade receivables don't carry that kind of aggressive interest. So the shareholders of Birko are subsidizing the operations of Textile. And if Textile goes bankrupt or just decides not to pay, Birko takes the 200 million TL hit.
Let's look at the liabilities. Because to lend that money, they had to borrow it.
And they did. Short-term liabilities spiked. They went from 65 million to 169 million. Short-term bank loans jumped from 19 million to 67.5 million. They are hitting the credit cards, so to speak. And long-term liabilities more than doubled to 234 million. They took out a brand new long-term bank loan of 95 million.
So debt is piling up fast.
Very fast. And why do you take on debt? Usually to fund growth. But here,
it looks like they're taking on debt just to keep the lights on and, well, fund the relatives. Which brings us to the most important document in the entire stack, the cash flow statement, the truth serum.
this is where the phantom feast metaphor becomes reality. We saw the net profit of 138 million. Now look at cash flow from operating activities.
Negative 139.2 million TL.
This effectively means that for every single lira of profit they reported, they actually burned a lira of cash. The core business making and selling carpets is consuming massive amounts of money.
Why? I mean, where is the cash going?
A huge chunk of it is going into those trade receivables. Remember we said that they're owed 200 million. That shows up here as a cash outflow. When you sell a carpet to your cousin and he says, I'll pay you later, you record the sale as revenue, but you don't actually get the cash. Birko is shipping goods or lending money and not collecting the cash. And that creates this massive negative number.
So they're bleeding 139 million from operations. Investing cash flow is zero, so they're not selling assets to cover it. How are they still alive?
Financing cash flow. It's positive 143.1 million TL.
The loans.
Exactly. They walked into the bank and said, we need 143 million. That cash inflow from loans perfectly covered the 139 million he'll drill hole in operations. They're literally borrowing money to fund the receivables from their related parties.
That sounds sustainable. That was sarcasm, by the way.
It is the definition of unsustainable. You cannot borrow forever to cover operating losses, especially not when interest rates are so high. Eventually the banks say, no more.
Or the interest payments become so high they just eat you alive.
And we can see that. The financing expenses in the income statement are already nearly 40 million TL. That cost of debt is rising fast.
Let's talk about free cash flow.
Deeply, deeply negative. For an investor, free cash flow is the money left over to pay dividends or buy back shares. Birko has none. They're in a cash deficit.
Okay, let's look at the ratios and some of the fine print in the footnotes, the debt ratios.
Net debt rose to 158 million TL. Now, if you look at the net debt to equity ratio, it's 7.43%.
That sounds low. I mean, usually I worry when it's over 100%. 7% sounds pretty safe.
That is the trap. The denominator equity is huge, it's 2.1 billion, but that's because of the inflated land value. But the numerator debt, that's real cash that has to be paid back every single month. The equity is paper wealth. You can't pay the bank with a chunk of revalued land unless you sell it.
So the trend is what matters.
Exactly. The trend is what matters. The ratio jumped from 1% to 7.43% in 1 year. The debt is growing much, much faster than their ability to generate any cash.
And speaking of that land, I found a footnote that terrified me. Note 11, regarding mortgages and pledges.
Oh, yes. The Terry Yaturam Bunkased disclosure.
Read that out for us.
It says there is a mortgage of 2.01 billion TL on the company's land and buildings in favor of Terry Yaturam Bunkasa.
2 billion.
Basically, the entire value of their real estate assets, their factory, their land, their fortress, is pledged as collateral.
So if they default on these loans,
The bank takes the land. The shareholders get nothing. This severely limits their financial flexibility. They can't just decide to sell a parcel of land to raise cash because the bank has first dibs on it. They are completely handcuffed to this property.
that completely changes the risk profile. You're not just buying a company with land. You're buying a company where the land is already spoken for if things go south.
Precisely. The asset is there, but the claim on the asset is already signed over to the bank.
Let's touch on shareholder equity. I noticed there's a capital increase.
Yeah, paid-in capital went up to 140 million TL. But it wasn't a public offering where you or I could buy shares. It was a Tassisli increase, an allocated increase to Nurhan Ocalan.
A family member.
Right, Nurhan Ocalan put in cash to raise the capital. The report says this was to pay off debts. So the family is injecting cash to keep the wheels turning, which is, you can see it as a sign of commitment, but also a sign of sheer necessity. They diluted the other shareholders slightly to get this cash injection.
Okay, now let's look at the management commentary and future outlook. What are they telling us?
They're very focused on the TMS 29 inflation accounting switch. They spent a lot of time explaining that. But regarding the business strategy, there is a definite shift.
They seem to be pivoting away from being a standalone manufacturing powerhouse.
The numbers confirm that. 23 employees, 0 exports, high related party receivables. They're looking less and less like a carpet maker and more like a holding company that manages real estate assets and finances its sister companies. The strategic directions section kind of hints at this asset holding structure.
And dividends.
Forget about it. They have past year's losses accumulated on the balance sheet of a roughly 3.3 billion TL. These are accounting losses from previous years, likely also inflation adjusted.
Yeah.
Legally, you usually need to clear those past losses before you can pay dividends.
So even with the 138 million profit this year,
They're still in a 3 billion hole of accumulated accounting losses. Dividend distribution is technically impossible.
so no yield for the investor. You are purely betting on the stock price going up.
Exactly. It's a speculative play.
Let's bring this all together. We've peeled the onion. We've seen the phantom feast. What is our conclusion?
Birko is a paradox. It's asset-rich, but cash-poor. It is profitable on paper, but it is losing money in reality.
The 138 million profit.
It's an accounting hallucination. It's the result of inflation adjustments, not business success.
The operations.
Bleeding cash. Exports are dead. Costs are skyrocketing.
So if I'm a retail investor and I buy Birko stock today, what am I actually betting on?
You're betting on two things, really. First, the real estate in need day. You're hoping that land is worth even more than $2 billion and that they can somehow unlock that value despite the massive mortgage.
And the second thing.
You're betting on the nephews. You're betting that Goshen Textile and the other related parties will pay back the hundreds of millions they owe Birko.
And if they don't?
Then Birko is left holding the bag with a massive debt load and no cash flow to pay it with.
It is definitely not a play on a booming carpet business.
No. If you want a growth story in textiles, the numbers here say look elsewhere. This is a distressed asset play or a real estate holding play.
Wow. Okay, that really clears up the mystery of the conflicting numbers. It's amazing how much that headline net profit can hide.
It's why we do this. Always, always check the cash flow. Cash never lies.
If you enjoyed this deep dive, please hit that like button. It really helps us out. And make sure you subscribe so you don't miss the next time we unravel a financial mystery like this one.
And if you have friends who are investing based on headlines alone, please share this with them. You might save them a big headache.
If you want to support the channel directly and keep these deep dives coming, please consider evaluating our channel membership options. It allows us to spend the time digging through these 50-page reports.
There's always the super thanks button if this specific analysis helped you dodge a bullet or maybe spot an opportunity.
Before we go, I want to leave you with one final provocative thought. We talked about how inflation created that 138 million profit through the monetary gain.
Yes.
So imagine next year. Imagine the government succeeds. Inflation drops to, say, 10% or 5%. That monetary gain line item disappears from the income statement, but the operating cash burn, the negative 139 million, continues because the core business isn't fixed.
Then you're left with a massive reported loss and a massive cash hole.
Exactly. Who pays the bill when the bank loans come due and the accounting magic wears off? Something to mull over. Thanks for listening.
Goodbye.